What if everything you thought you knew about your Social Security check was about to change, and nobody warned you in time? That is not a hypothetical. That is exactly what is happening this July, and if you are over 60, or if you are getting close, you need to hear every single word of this before you close this video. Because what the Social Security Administration is rolling out this summer could quietly cost you or save you thousands of dollars, and the difference is going to come down to one thing: whether or not you know what is actually happening. Welcome back to Retires with Linda. If you are new here, this channel is all about making sure that you real Americans who have worked hard their entire lives understand exactly what is going on with your retirement money, your benefits, and your financial future. Every single week, we break down the complicated stuff in plain English, so you never get caught off guard. And before we go any further, if you have not already subscribed to this channel, please take just 2 seconds and hit that subscribe button right now, because this is the kind of information that comes out every week here, and you do not want to miss a single update. Okay, now let us get into it, because this July situation is something I have been watching closely, and there is a lot you need to understand. Let us start with the big picture. Social Security is not just a government program. For tens of millions of older Americans, it is the financial backbone of their entire retirement. The Social Security Administration reports that roughly 90% of Americans aged 65 and older receive Social Security benefits, and for nearly half of them, those monthly checks make up at least 50% of their total household income. So when anything changes at the Social Security Administration, any policy shift, any adjustment, any update to how benefits are calculated or delivered, it does not just affect a spreadsheet somewhere in Washington. It lands directly in people's bank accounts. It changes whether someone can pay rent, cover their prescriptions, or buy groceries without stress. This is not abstract policy. This is real life for real people. And July, specifically, is shaping up to be one of the more significant months we have seen in recent memory when it comes to changes that could affect retirees and older Americans. We are talking about a combination of factors, some expected, some surprising, that are colliding in a way that demands your attention right now, before July arrives and these things start taking effect. So, what exactly is happening? Let us walk through this carefully, because the full picture is made up of several moving parts, and understanding how they connect is what will actually help you. First, let us talk about the ongoing pressure on Social Security's funding timeline. This has been a topic that comes up every year, but the projections that trustees have been releasing suggest the trust funds are under continued strain. The Social Security Board of Trustees releases an annual report each spring, and in recent reports, they have repeatedly flagged that without congressional action, the program's ability to pay full benefits could be significantly reduced within the next decade or so. Now, nothing dramatic is expected to happen overnight in July. But here's the thing: this funding conversation is directly shaping administrative decisions that are rolling out this summer, including changes to how the agency is operating and serving beneficiaries. And that is where things start to get very personal very quickly. Second, and this is something that does not get enough attention, the Social Security Administration has been going through significant operational changes. There have been staffing reductions at the agency, office consolidations, and shifts in how people can access services. What this means practically is that if you need to call Social Security, visit an office, appeal a decision, or sort out any kind of issue with your benefits this summer, you may be facing longer wait times and fewer options than you are used to. Reports from advocacy groups that track Social Security access have noted that field office wait times and phone hold times have increased notably, and in some areas, local offices that people relied on have closed or reduced their hours. This is the kind of operational change that does not make headlines, but absolutely affects the people who depend on this program most. If you are someone who has been putting off dealing with something related to your benefits, an address change, a question about your earnings record, a review of your benefit amount, July is actually a critical time to address that, and you need to go in with your eyes open about the fact that getting help may take more effort than it used to. Third, and this is where it gets really important for those of you who are either close to retirement age or have recently started receiving benefits, there is significant attention being paid right now to Social Security's earnings test and how benefits can be affected if you are still working. This is an area where a lot of people get tripped up and end up leaving money on the table or, on the flip side, getting surprised when their benefits are temporarily reduced. Here is how it works. If you are under your full retirement age and you are collecting Social Security while still earning income from work, there is a limit to how much you can earn before your benefit is temporarily reduced. In 2025, that limit for people who are not yet at full retirement age is around $22,920 per year. If you earn above that, Social Security will withhold a portion of your benefit, $1 for every $2 you earn above the limit. Now, the important word there is temporarily. Once you reach your full retirement age, those withheld amounts get credited back to you and your benefit is recalculated upward. But in the meantime, if you are not aware of this rule and you pick up extra work or consulting income in July or the months leading into the end of the year, you could find yourself facing a situation where your checks are reduced or even paused temporarily, and that can catch people completely off guard. Now, let us talk about something that a lot of people in this audience are dealing with right now, the Medicare premium situation and how it connects to your Social Security check. Most people who are enrolled in Medicare Part B have their premiums deducted directly from their Social Security benefit. The standard Medicare Part B premium for 2025 has gone up compared to prior years. And while the annual cost of living adjustment to Social Security benefits that took effect in January was meant to help offset rising costs, for some people, particularly those in certain income brackets, the net effect on their actual monthly check has been smaller than they expected. And here is what is coming into focus this July. The income-related monthly adjustment amount, which is the extra premium that higher-income Medicare enrollees pay, is based on your income from 2 years ago. So the income data being used right now to determine whether you owe higher Medicare premiums is from your 2023 tax return. If your income was higher in 2023 than it is now, maybe you had a one-time event, like selling a house or a big distribution from a retirement account, and your income has since come down significantly, you may be paying more for Medicare than you need to. There's a process called IRMAA, reconsideration, that allows you to appeal those higher premiums if your income has since changed due to a life event. July is an excellent time to look into this because getting that process started could mean lower Medicare premiums and a higher net Social Security check for the rest of the year. Let us talk about another group of people for whom July carries specific significance. Those who are approaching their 62nd birthday, their 65th birthday, or their full retirement age, which, depending on when you were born, lands somewhere between 66 and 67. These ages are what Social Security calls milestone ages. They are the points at which your options and your decisions become particularly consequential. At 62, you first become eligible to claim Social Security retirement benefits. At 65, you become eligible for Medicare. And at your full retirement age, your benefits are no longer subject to the earnings test we talked about earlier, and you have the ability to do things like file and suspend or claim spousal benefits in ways that were not available before. If any of these ages is approaching for you this summer, or for a spouse or a family member, the decisions you make in the coming weeks and months could have a lasting impact on your benefits for the rest of your life. Claiming even a few months too early can permanently reduce your benefit. Waiting a few months longer can lock in a higher payment that compounds for decades. These are not small differences we are talking about. We are talking about potentially tens of thousands of dollars over the course of a retirement. Now, here's the moment I want you to really pay close attention to, because this is the part that has not been covered enough. And I think it is the true bombshell buried inside everything else we have been talking about. There has been real, substantive discussion, both in Congress and within policy circles, about potential changes to how Social Security benefits are taxed. Right now, depending on your combined income, up to 85% of your Social Security benefits can be subject to federal income tax. This threshold was set decades ago and has never been adjusted for inflation, which means over time, more and more middle-income retirees have found themselves getting taxed on benefits they never expected to owe taxes on. There are active proposals being debated that would change or eliminate the taxation of Social Security benefits for many retirees. Now, nothing has been signed into law as of this recording, but the momentum around this conversation is real, and the outcome of it will matter enormously for the take-home income of millions of retirees. If you are currently paying federal income tax on a portion of your Social Security benefits, you should be watching this very closely. And if you are not sure whether you are in this situation, here is a quick way to think about it. Take your adjusted gross income, add any tax-exempt interest, and add half of your Social Security benefits. If that combined number is above $25,000 for a single filer or $32,000 for a married couple filing jointly, some of your Social Security is likely being taxed. If a tax change comes through, even a partial one, it could meaningfully increase the amount of your Social Security that you actually keep. That is the kind of change that would put real money back in your pocket every single month. At the same time, you also need to be aware that some proposals making the rounds would fund any benefit improvements by changing the way high-income earners are taxed for Social Security purposes specifically, by raising or even eliminating the cap on earnings subject to Social Security taxes. That cap currently sits at $176,100 for 2025, meaning income above that is not subject to Social Security payroll taxes. Proposals to raise or eliminate that cap would have implications for higher earners that extend well beyond retirement. This is the kind of systemic shift that, if it happens, changes the math on retirement planning in ways people have not fully prepared for. And that brings us to something that every single person watching this needs to internalize before July arrives. Your Social Security benefit amount is not necessarily final. A lot of people assume that once they start receiving benefits, the number is locked in and there is nothing they can do. But that is not entirely true. If you claimed early and you are still within 12 months of your initial claim, you have the option to withdraw your application, repay any benefits received, and refile later at a higher amount. If you have reached your full retirement age and you are already receiving benefits, you can voluntarily suspend your benefit and let it grow by 8% per year until age 70. These options are real and they are powerful. And the fact that so many people do not know about them is a genuine problem. The Social Security Administration is not going to call you up and remind you that these options exist. You have to know to ask. Let us also spend a moment on survivors' benefits and spousal benefits, because this is another area where the July attention on Social Security is surfacing important issues. Many widows, widowers, and divorced spouses are not receiving all the benefits they are entitled to. The rules around spousal benefits and survivors' benefits are genuinely complex. For example, if you are divorced but your marriage lasted at least 10 years, you may be entitled to benefits based on your ex-spouse's earnings record, even if they have remarried. If you are a widow or widower, you may be able to claim survivors' benefits as early as age 60, while letting your own retirement benefit grow. Coordinating these two benefit types, taking one first and switching to the other later, can result in significantly higher lifetime income. But you have to know this strategy exists, and you have to apply it at the right time. With the operational pressures on Social Security offices this summer, getting personalized guidance on something this complex is going to take more planning and persistence than it used to. Do not wait until you are in a rush. So let us pull all of this together because I want to make sure you leave this video with a clear sense of what you need to be thinking about and doing right now. July is bringing a convergence of pressures, policy discussions, and operational changes at the Social Security Administration that could affect your benefits in ways both large and small. Whether it is understanding the earnings test if you are still working, reviewing your Medicare premiums and whether you qualify for an IRMAA reconsideration, making sure you are on top of the key milestone ages and what decisions they trigger, or paying close attention to the tax reform conversations that could change how much of your Social Security you actually get to keep, all of these things are live and relevant right now. And the single most important thing you can do is stop assuming that everything is fine and that the government will alert you if something changes that affects you. That is simply not how this works. The people who protect their retirement income are the ones who stay informed, ask questions, and take action before something becomes a problem, rather than after. You being here, watching this video, asking these questions, that is exactly the right instinct. But knowing is only the first step. The next step is actually doing something with what you know. If you have questions about your specific situation, your benefit amount, your Medicare premiums, your filing strategy, any of it, reach out to your local Social Security office. Use the My Social Security portal online or consult with a financial planner who specializes in retirement. The My Social Security online account is genuinely useful. You can check your earnings record, see your estimated benefit at different ages, and manage certain aspects of your account without waiting on hold. If you have not set yours up yet, July is a great time to do it. One more thing before we wrap up. I want you to think about the people in your life who need to hear this. A neighbor who is turning 62 this year. A sibling who is already receiving benefits and does not realize they might be overpaying on Medicare. A friend who is still working part-time and does not know about the earnings test. The information we covered today is exactly the kind of thing that does not get shared widely enough, and a lot of people are quietly being affected by changes they never saw coming. You can change that by sharing this video with someone who needs it. It takes 10 seconds, and it could genuinely make a financial difference in someone's life. And here on Retires with Linda, that is exactly what we are here for. Every week, we cover the topics that matter most to retirees and people approaching retirement. Social Security, Medicare, taxes in retirement, how to make the most of your fixed income, and how to protect yourself from the financial curveballs that nobody warns you about. If this kind of content is valuable to you, please subscribe and hit the bell so you get notified every time we post something new. We do this every week and we are not slowing down. Now I want to hear from you. What is your biggest concern going into this July when it comes to Social Security? Are you worried about what the funding discussions mean for the long-term future of your benefits? Are you trying to figure out when the right time to claim is? Are you dealing with a Medicare premium issue that has you frustrated? Whatever is on your mind, drop it in the comments below. This community is full of people navigating the exact same questions, and your comment might be the thing that helps someone else feel less alone in this. I read every comment, and I use your questions to decide what topics to cover next, so your voice genuinely shapes this channel. Share this video, leave a comment, subscribe if you have not already, and I will see you in the next one, where we keep making sense of this stuff together.